And we are rolling. Let's get into things. Let's do some data analysis. Let's look at some statistics. But first things first, in my opinion, it doesn't make sense to do data analysis until you look a little bit on the context, right? And in this case, the context is obviously quite bearish. So, well, you probably already know that I was expecting a range here. We had here the breakdown. We were looking at some bullish scenarios. Clearly didn't play out. Instead, we got the bearish follow through, and now things are not set for a reversal up anytime soon. There is obviously the case, or at least, we are still within this range. So this could potentially turn into a big deviation. But even if it does, this is going to take time, right? And for now, this looks more like a bearish impulse. Well, it is a bearish impulse, right? Where you come from here, here. Oh, that's the wrong one. Here, 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 right? Where this is just an impulse. And if anything, this could still, it's not even the confirmed impulse, end of the impulse yet. I expect it to be. I don't think this low will be taken anytime soon, but it's not confirmed yet. But regardless, there's a couple of key takeaways that come from this, right? First of all, after such a, because this was obviously an insane move down, after such an insane move, you generally expect a range, right? It's what we were saying. Okay, we're looking for a bounce, but we're also expecting a range. Actually, the high of the range is being put in exactly where I was personally looking for it, at least for now, but we'll get into that a little bit more. But the main takeaway is this, is that we are currently obviously downtrending here in the local range until we confirm a bottom here, which we haven't yet. I do think we'll confirm it by doing something like, something like this. I don't think this will be taken out soon, but it can still be, because otherwise, if I look at this on the 3-day and you only have one bullish candle here. If you go down here, you don't have any structure here yet. But the main takeaway is that if you want this to continue downwards, right? If you want this to continue downwards, you would generally expect this to not reach above the 0.5, and preferably you would prefer it, or preferred you would like to see it not reach above the, or close above the 0.382. I would say that closes here, like a wick here, is fine, but closes here generally indicate more a range where you do something like this. Whereas if you, as long as you stay below this, right, maybe a little wick there, then usually that indicates weakness and a continuation of the trend, right? You can see that on all time frames. Good examples are, well, let's just look at the bull markets as we had it. So here you can see what I mean. Closes at the 382, small wick to the 0.5, but never really any closes, right? So price really never found acceptance there. So we had that as a big impulse. Then we had here to swing low, here to swing high. We do the same thing here. Same thing, right? Closes at the 382, quick wick towards the 0.5, but no closes. And then what we had right here is a swing with closes towards the 0.5, and eventually this turned into this massive range that we are now in, right? So that these closes at the 0.5 were already an indication. And I've backtested this a little bit more thoroughly. This is quite effective. Especially after this happened, I went and did some more backtesting, and then you can see that, okay, if price starts closing at the 0.5, that usually indicates more strength or weakness depending on the direction, right? Exhaustion of the move, and therefore you'd expect more trend. You can see this on all time frames. So for example, if we have here, then you can see that once again, we didn't even make the 382 in this case, right? If we would have made it here with closes, would have been more strong, never made it. So now this level is going to be very important, the 382, which also happens to be the low of said range, right? So this is going to be a very, very, very strong level. When we reach it, if we reach it, then you would expect this to give some kind of reaction, and it's going to be very important to claim, right? Because the takeaway is that if we claim it, then we can make it to the 0.5, have some closes here that would generate or at least signal some strength, and we maybe see some range form, right over there, and possibly a reversal. If not, if instead we do something like this, then this would be very bearish, depending on how price develops here, and you're looking for lower prices, right? So the 382 here is very, very important. 74K, also the range low. So this is the context, right? The context saying, well, we're currently deviating below this range. I am personally going to assume this is a range, right? And this will hold as a range. I think that's a safer assumption than saying it will break out. But for now, I don't see a reason yet to have big longs here. For that, I would prefer to see a little bit of a range here, see the low swept, you know, sign of strength number one, sign of strength number two, claiming the range back. But now that's way too early to say, right? Way too early. So the main context is that we're still trending down, and then we go on the lower time frames, and we'll get to the statistics. I'm just shaping the context because obviously a lot has happened since the last stream. And we go to the market structure. So what I was saying on the down move is, okay, don't assume a bottom. Like this whole down move was actually crazy, but the general idea was don't assume a bottom until some market structure is broken. I mean, this you really only see on the lower time frames every now and then, where you just have an absolutely rootless series. You can kind of, well, you can count this series of lower lows, lower highs, just failing to break that lower high at all. And then you have some even lower structure. So what I said was, okay, just wait for that to break. And then eventually here we finally break some structure, and then you can see the relief. And then what happened next to finalize the context is that obviously a lot of people will see this move up. There's quite a move up, right? 14% jump or something, 12%. And people will start FOMOing in to a position at the top, start buying back because they think, well, shit, that was the bounce. But the reality of the market is that we very, very, very rarely see a V-shaped reversal. So in this case, I'm not expecting one either. I would love to see one, obviously, but I just think it's much more probable to at least form a range, right? Which is what's starting to happen now. And from there on, see what's happening next, right? Either when we keep on distributing downwards or that we actually accumulate and go upwards. But for now, too early to say. But what we can say is where we come to the structure. So I have my structure mapped out. And what I said in one of my posts is that what I'm waiting for is one of the highs to be taken. So this was the first one, the 15 minutes, but then we went up. And then what I basically said was, okay, I'm personally expecting the range high, the local range high, for now to form at one of these market structure points. Why? It's simply something that you see happening often, especially after such a big dump down. You can see that here we almost hit it, right? We almost hit it. Something I actually used to call the FRGR. We called that in a previous trading community. Those from the Jason Casper crew will know. Front runners get wrecked. Then you front run the level, you come back, and then you sweep it. So eventually you sweep this, and this by itself is a strategy I've been backtesting quite a lot. Works pretty well. But you sweep it and you go down. And for me, this kind of confirms the range. And when I say the range, I'm talking about this range right here. And so far, let me simplify this thing. Range 2, 5. Simplify. And so far, we haven't reached the range low yet. Now, logic dictates that once you reach the range high, range lows are next. So personally, I believe the range lows are next here. But the takeaway is this. I think the main takeaway you have to understand, this is the local range. We're obviously waiting for a higher time frame range to form because we're looking at a very small time frame. But if we want this impulse to really print like this impulse, a proper bottom, you're talking about a range that will form over weeks, right? Probably 2 weeks at least. So that obviously requires this to turn into a much bigger range, right? And whether that will actually happen remains to be seen. However, we do have our context now nicely in check, which is that we bounced from this bottom, we're going up here, we reached this market structure and wicked it right here, followed by a rejection, right? So for now, it looks like locally rearranging, which is very much in expectance. And we had a failure to break this market structure at the top. Doesn't mean that we cannot, or at least how do you say it, we cannot break it, but for now it is acting as resistance. And if we break it, then I would personally just be looking at the next resistance, which, as you know, is the 74K level. right? Which I have highlighted earlier, which is going to be a very important level. But this brings us to the current day, right? Context driven. And then we can say, okay, let's look at data. So let's look at data. First of all, let's look at the monthly. One thing I want to say about the monthly is something I always say when something very like an outlier event happens. This for me is, this dump is an outlier event, as in this is not what's, because what we do with the data, I always say, is we look for patterns that occur more often and we, within that space where we say, okay, this pattern is happening more often than it is not, we try to make decisions by following that pattern. This month is already following a pattern that is not very common. So if I put on the pivots, right, we had this massive, massive dump. Then what I said at the start already here is that we obviously printed this pretty big wick warning, right? 93% of P1s monthly high have a bigger wick. 93% of monthly highs have a bigger wick. Now, what I always say is that these highs, and I made a little infographic on it. Maybe I can actually share that. High probability and low probability lows. Let me quickly grab that because I do think it's useful. There it is. There it is. Let me open that. So I was talking about high probability wick warnings and low probability wick warnings. And what I mean with that is if you have a wick warning here, for example, you have an uptrend and you have a wick warning at the high and you left it behind after retracement, then I would call that high probability wick warning. Why? Because you are trading with the trend, right? You're trading with the trend. The wick warning is with the direction of the trend. And therefore, I think it is a high probability wick warning, as in high probability to be taken out. If on the other side you have a low probability wick warning, what that means is that it is against the direction of the trend, right? So in this case, the trend continues, the trend goes up, and you can see that the wick warning is at the lows of this impulse. And like I always say, small wicks usually only get printed during impulsive moves, right? So after the move trends away from the wick warning, that's usually when a wick warning will be invalidated, or at least when the small wick will actually print, right? When it will not get taken out. Now, when does that happen? When does price trend away from it? Well, for example, in a trend, right? So in this case, this is the low of the retracement. Eventually, price moves away very drastically. If you're at this point in time, then obviously you do not know yet whether this is going to be the breakout. So this becomes more obvious the further in the move you get. But this one is, for example, you can see, okay, we're going against the trend, right? Or with the trend, sorry. So my first question here is, are we going with the trend or against the trend? Then my answer is, okay, we're going with the trend, right? Because the trend, or at least this would go against the trend, sorry, because the trend is clearly down at the moment. On this time frame, the trend is down. So this wick warning is not necessarily for me a high probability wick warning, as in I would not necessarily count on that high being taken out. If there would be a wick warning here, for example, right, just to sake the argument, I would be much more confident that it would get taken out. Then also, not only that, but we have the 1 hour, we have the 30-minute swing high before it, we have the 1 hour swing high before it, and we have this massive 74K level before it, all after a massive dump. So we would have to make quite some grounds, 32% from low to high, just to take that wick warning. Again, not necessarily something I would bet on because it is simply against the trend, right? That's very important to understand. And also, the main thing, what I already alluded to, is that when we are in probable territories, which is where we are right now, right? Because the month did something, well, quite aggressive, something that you don't really see every week or every month. And for me, the statistics of the month in this case hold less weight. All right, I do this with the same with the weekly or the daily. If something crazy happens on the day, I usually say, okay, I'm going to wait until the next day before I start looking at statistics again, because I already know this is an improbable day, right? So it doesn't make sense to look for the probable outcome if you're already in the realm of the improbable. Back to the wick. well, one more thing about that, you could say, well, I cannot look at it the whole month, and then yes, that's true. It's just, yeah, it is just a very high time frame, and that is the thing, right? Like in this case, it would mean waiting an entire month for the next month, but there is still the week, there is still the day, and so on. However, we can still look at this monthly wick on another angle, and that is there is also high probability wick warnings and low probability wick warnings within a range. So, for example, if price is range bound, you can see, for example, here price deviates to low of the range, and we have a wick warning just above. Then you could say, okay, once this claims the range low, you could say, okay, this high probability of this wick warning is likely going to get taken out. On the other side, if, however, you print the wick warning on after deviating the low and going back into the range, where you're thus expecting a move towards the range high, then I would personally consider this a low probability wick warning. Why? In terms of mean reversion, you would expect, a nice move outside of the range, followed by a move into the range, and then you can see aggressiveness, a big expansion towards the other side. And then you would say, okay, well, this move is also with the trend in between quotation marks because you're no longer trending, right? You're ranging, but you're trending within the range towards the other range opposite, right? So I hope that makes sense. And a good example of that, well, before I get a good example, what I really want to make clear in this side is that the only case I would personally make for this monthly high still to be taken is if we start forming a very clear range here and we start taking that range low, which would probably not be the monthly low, but any low here. We take it, you have some good confirmations. Then maybe I would say, okay, yeah, now we're in a range, right? And we deviate this and then we go like this. Then you could say, okay, it is in line with expectations to take out that monthly high, that small wick, right? But until that happens, I am not going to count on that. Very good example of this is something we had a couple of months ago, maybe 2 months ago. Oh, no, last month, sorry. So we go here. Firstly, I was not like I was betting on this wick warning being taken out until we got this high. I wasn't so sure anymore because it was pretty late, right? But for example, Lars from TCT had a really nice one where you simply had his range. His range was right here. So he was looking for and I thought it was a really nice example that he posted. So he was looking for a rotation towards the lows of the range. Then here, after claiming this range back, it became a high probability. Why? Because this is somewhere more or less in the middle of the range. And what basically here got confirmed was a deviation from the high of the range back towards the lows of the range. At least that would be the expectancy. And in between there, right? So this is deviation, move back in, target. So in this case, you would expect whatever is in the middle to be taken. And that's eventually what happened, right? It was TCT, really nice one. So that's what I mean with high probability wicks and low probability wicks or wick warnings. And in this case, for me, the current monthly high is more low probability, right? So low probability, as in I would not necessarily expect it to be taken out. But once again, if we start forming a range, a bigger range than this, I could see it get taken out. But I would like to see some more confirmation for that. So onto the lower time frames. And for me, that is mostly the weekly. I don't think there is anything super interesting yet, simply because I would like to see a little bit more data being generated by the market. I would like to see a little bit of a bigger range being generated. Obviously, if you are a lower time frame trader, then this is a very interesting range to look at. But if you're a little bit higher time frame, where I like to focus more, then you simply want this to generate more data, as in you want to see at least this kind of range form, right? So for me, that is going to take a while. If, however, I interpret the weekly statistics and the daily, let's get into those weekly and daily. 3 hour, 1 hour there. So I can get both of those on. Right, so the daily, immediately what I see is that it looks pretty exhausted. 56.9% of days move further than negative 3.1%. Not necessarily something I would bet on to see a lot more displacement, although we do have quite some volatility in this market, but not something I would necessarily bet on. Then obviously the context is that we have the range here, still need the range, so you're not going to short here either because you're closer towards the range low. The thing I'm most interested in is this weekly high and low on Monday. So far, it doesn't tell us much, right? You can see 95 or 59% of weeks took out the weekly high. And that is because, well, we have both the weekly high and the weekly low on Monday. So what we basically want to see is that if we take out the weekly low, then we obviously have a much higher chance of this continuing to go downwards. And that is actually my bias, why this is resistance. We have a local time frame range forming here, right, as we have discussed. And we are expecting a higher time frame range to form at some point as well. And at least until now, this is proving to be resistance. This is most likely the target. So what happens is that if we take out this low right here, then lower becomes more likely because this is proven to be resistance. We have a high here on the Monday. And basically what we'll be looking at is asking ourselves, okay, how far can we go? And how far can we go? Then in my opinion, that is the 80% targets, what I would look at, 80 or 70%, because we have quite some displacement. So 67 or 66.6K. So this is, once again, asking the question, how far does price usually move from weekly high to weekly low? And in this case, it's 67. That's the wrong one. This is it. And 66.7, more or less. So you can see we're already quite far. We're already quite far in the weekly move. Nope, scratch that. 97.5% of weeks move further. But we can see that the downside is actually what I'm gonna do is, because I'm thinking now the downside is rather limited. That's probably because I have the last 3 years. If I do the last 4 years, I also get a bear market statistic in there, which I think would be more accurate. At last 5 years even. 66.9, 65.6. So what I'm doing now, because I have the last 3 years all the time, because we're obviously in a bull market, but now the market is behaving obviously a lot more like a bear market, so it makes sense to gather statistics as well from the weeks where it was more a bear market environment. Changes are not that drastic, but it changes from 66.9 to 65.6. 66.9. Yeah, I would use the 80% one because the previous bear market was also at a lot lower prices. So this is the 80% weekly confidence target. So in my opinion, what this would mean, what would be really nice if it happens, if you have this as the range, or you can have this as the range now. Let's tidy up the chart a little bit. What would be really nice if price, for example, would do something like this, and then you could short somewhere here with the weekly high as the invalidation. Probably wouldn't go that high up, to be honest. But obviously, right now there is no trade. The only trade you could take is along with the opposing idea, right? Because the invalidation is really close. Because once again, we know that on the weekly statistics, 61%, well, this is not true. I have to go to the last 2 years to get a more accurate time. 70% of weekly P1s form on Monday, especially lately. So if this breaks, then this becomes much more unlikely. If this breaks, then this becomes much more unlikely. So you could say that, okay, well, I would long here because I know that this is a clear invalidation, or at least, and then this would become a 20% occurrence. I wouldn't do this because, A, you're super, super close towards the weekly low, which obviously makes it much easier to take it out. And secondly, context is this dictating that you're in range. We deviated at the top of the range. And normally the target after the top of the range is the low of the range, which is right here. And if we don't get the low of the range, then this, in my opinion, would be a bad low, and then surely we would come back for it later on, right? So I wouldn't be looking for longs here. Instead, I would be looking for confirmation shorts, and this would be really nice because then you're looking at your confidence targets right here, and it kind of makes sense if you look at those confidence targets because you would expect as soon as this range could expand a little bit like this, becomes a little bit bigger, expand a little bit like this, right? Until it becomes a full-fledged that 4 hour or daily range even that we're kind of looking for. But once again, this could still be a continuation towards the downside, right? So this is the thing I mean that we are in the downtrend, right? So my bias is more towards the downside unless we see a big range form and a reversal, right? I think downside is more logical or ranging, right? Or ranging is what we're looking for right now. But until that happens, right, this could still do one candle, go further down, right? Something we need to be aware of. I don't think it will happen, but definitely something we need to be aware of. So in all that sense, I'm actually backtesting some new strategies just to get shine some more light on it. I think it was the last one that was yesterday that is currently running. It's for the same reasons. It's basically what we just discussed about that yesterday, right? We're at the top of this range. You then lose this range, you actually come back. And what we can do in this case, it was very nice because it was late in the evening. And then okay, you're going to have to put in that week. If the weekly high is going, or if the weekly P1 is going to be the high, it's going to be somewhere around here, right? Because it's probably not going to be Tuesday, not much later. And you have this as a very nice invalidation. So it's a good timing, right? Because it's a weekly P1. It's a weekly P1. Or at least it's a Monday. And if you want to put in a P1, it's going to be a Monday. You have the range high here. You have your 80% confidence target right here. And that's what the target is based on, right? And also because it is the low of the range, and therefore this was a nice entry. This was just backtesting, though. I'm doing some extensive backtesting, as you can see here on some strategies. This one's looking pretty promising, this whole ranging strategy, and I'm trying to combine it, obviously, with the time statistics. In this case, this one formed pretty well. Obviously, this one would have been the better entry, but it was on a Sunday. So Sunday, 11 p.m., not when I'm active at the charts. So I'm not going to pretend like I could have grabbed it. So that's something, where you combine time and range. And obviously, if you take this low, then it becomes even more higher probability. The highest probability setup is what I just described, is that, in my opinion, if you do something like this, take out that low, do something like this, and then do that, right? Because if you have that Tuesday low, then the Monday high becomes even stronger. Let's quickly look at one more thing, and that is this. I want to see what all the metrics are saying. Yeah, so there's also no clear, the weekly high doesn't look bad in terms of distance, in terms of time. It's not necessarily early or unusually early. It's also not unusually late. So no warning signals there. You get that back on. Right there. But obviously, as long as this holds, right, there is still definitely a higher chance, or at least as long as this holds, there's still a chance that you're going to do this, right? But something you need to accept. There's always a chance for that to happen. I know I've read some things that Tuesday and Wednesday P1s happen more often. I haven't seen it myself. I mean, we can literally just check, for example, in the last 3 months. Yeah, no, I don't see it, right? Still 70% P1s. Tuesday and Wednesday still make up 30% together in the last 3 months. So there's really not much difference for me. There's no reason to focus on Tuesday and Wednesday P1s. And if they're going to happen, I would like to see them happen on the edge of ranges. I think that's more common from what I've noticed. So if you, for example, do this, put in a Wednesday here, Wednesday low, then I would say that's more common to put a P1 in at the edge of the range rather than some arbitrary place like here. I think this is something that also happened. I know that's something that also happened within this range. So for example, this was a Thursday. Well, this was the high of the range, and then we had a massive drop. I mean, this is something still very aggressive, but it's something you just see on all time frames where unlikely pivots tend to be put in more at the extremes of ranges. All right, next up. So we're in this local range right now. I mean, personally, I don't think there's anything to do within this local range rather than wait for the range extremes. And if there is more to do, then that is scalper's territory and definitely not my expertise. But if you were to entertain the idea there is something to do here and you go to the daily and the session, then apply that. Well, we already seen this, right? 56.9% of days move further than negative 3.1%, and 91.6% of days form a new P2 after 1305. 17.2% of days took out the daily high. So in this sense, what I would take away from this is that likely we are going lower, right? I know this is not that, well, this is pretty indecisive, 56.9%, right? It's basically a coin flip in terms of how many days see further displacement. But we are in a pretty volatile environment ever since this whole drop. The market has been the market is ranging here, but it's still quite volatile in terms of percentage displacement. And this is for me the deciding factor. We have a very high value for this one. 91.6% of days form a new P2 after 105. So it would be very rare to put in a P2 this early. And it's also not like anything super crazy happened that would make me say, okay, well, this is an outlier, right? So far, price is behaving pretty normally. Then you draft the idea that you basically have a equal low there, which is not a very good low right here. Not a very good low indeed. Then we have New York that just opened. Again, I'm just doing this for interpretation purposes because I would never get involved here. I just don't think there's anything here. No, this middle of the range. But if you look at the session, then the 60.2% session took out the session low, so that's still not improbable, I should say. And we obviously have very high chance of taking out the low or high. And then what I want to do is do the following. Bearish confident targets for the current New York session is, okay, we're already pretty high up. So in terms of displacement towards the upside, you don't want to go much higher than this if you want to see any downside. 86.8. So what this means, if you have 86.8 right here, is that only 40% of bearish New York sessions make it this high up before continuing down and taking the low. If we do that again, for example, here, then we see only 30% of New York sessions make it up to, oh, don't want to copy all of that, 86.988, which is just above the level we already hit. So in general, you don't want to go much higher than this because you just know that if you go higher than this, it becomes very unlikely for price to still reverse and take out the low, right? So say your bias would be short bias for the session. I'm talking about the New York session. You don't want to go much higher than we already went, right? This is already more improbable, but you can see here that by 69.1, at this point, this becomes really unlikely territory to still revert and go back down because at this point you have only 20% of sessions that will still revert and go back down towards the low. So if your bias would be, okay, I want to see further downside. And for me, I would say the downside risk is higher than the upside risk at this point in time for the daily. But once again, Normally not something I get interested here because of just the middle of nowhere. But for the sake of argument, I would be looking for more downside there. And in this case, if you're looking for more downside, then you also know pretty well where your invalidation is, because your invalidation, well, you don't want to go above this level pretty much, right? So you're already pretty close to there. If you do that, you do the math, you say, okay, well, if I want to see further downside, it probably have to happen from here, go down from there. And then you say, well, where would I go? 80% confidence targets, 67.8, 67.8, you would go more or less here, right? So this is more or less kind of the setup you would be looking at. And once again, for the sake of arguments, I would really advise that you apply this to whatever strategy you have, right? So whatever invalidation you see here, but purely statistically speaking, it would look something like this. But once again, not something I am interested in, because we are in the middle of nowhere, and I would like to see these kind of statistics when we're not in the middle of nowhere and we're actually at a point of interest for me. But if I look purely at statistics, then I do think lower for today is more likely to get this move down, to have a bearish session, because we know we don't want to go much higher than this, right? At this point, we say, okay, well, this is really not looking great, as in at this point, only 20% of New York sessions would still break down and take out the low. And we can do at the same time, we can look at our session confidence targets to figure out what a good target is, right? Which is more or less here. I would always be more conservative personally by looking at 80%, 70% targets rather than 60% targets. But, you know, that's just me. So I do like this. I do think this looks pretty decent. Let me get those tidied up a bit. No, I want to keep the last one. That's 20%, right? 20% bearish P1 session. There you go. Right there. We obviously have this. I just analyzed this. That arrow is poorly placed. Local downtrend here. Yeah, so this is one reason why I would firstly be a bit hesitant on this one, because you could also classify this as even a lower time frame range, right? So one reason why I personally would not take this. But again, just showing you how to read the statistics, right? But I think really, really important is that you have a clear point of interest that you're looking at, right? And for me, it's very clear. I have a very clear point of interest I'm looking at, and the point of interest is the edges of these ranges. So what I would, for example, love to see is, imagine this happens next week, and then we do this on the Monday, right? Break out that Tuesday here, break out the Monday high. Then the statistics will tell us that it's much more likely to take out the low than the high. Then things become very interesting for me, and I will look if the statistics line up with what I'm seeing on the charts, and then I'll act on it as that comes, right? But in this case, too low time frame for me. It might not be for you, right? Might not be for you. This might be the time frame you're active on, but for me, it is too low time frame. But that's it. This is what I'm waiting for. I am waiting for the ranges to mature a bit more. For me, this is the first range that is clear right here. I'm just waiting for the edges of the range to be hit. I hope to see some very nice statistics when we do reach them. Until we reach them, I'll be patient. I do think that the weekly is looking better for a bit more downside. Obviously, the invalidation is right now. It's very simple. We can say whatever is being taken out first, the weekly low, the weekly high, determines likely the direction. So if we do this, we'll probably go higher for the week. If we do this, we probably go lower for the week. And personally, my bias is for lower, but in case I'm proven wrong, you can say 80% targets, 69.27, 69.27. Oh, wait, that is the session. My bad. Oh, let me get to 5 years. Then it would be 7.7, 7.9%, 73.6. And I mean, that would be a very nice 73.6. That would be a very nice place to top out. 73.6 to 80% bullish weekly confidence target. That would be a very nice place to top out. Why? Because it is right there. The range low, not only the range low, it is also the right here, the 382 of this move. And I explained at the start why the 382 is relevant, right? You would expect this to act as resistance if this move still has gas left in the tank towards the downside. So we have a bearish scenario, we have a bullish scenario. 80% bullish weekly confidence targets, 80% bearish weekly confidence targets. I place it on once again, 66.9. So if we once again get this, this would be really nice for potential lower prices, also the low of the range, right? And if we don't, well, then in my case, I will miss that move because I don't simply don't see a reason to enter long here, right? I don't see it. So that's it. That's my bias. Unless there's any questions, I'm going to leave it at that. I will tell you that we are very close to releasing, or getting closer and closer to releasing our proprietary platform. We're building really hard, and once we release that, things are we're really gonna accelerate in building new features. But it was quite an undertaking to rebuild everything. So we're gonna migrate away from Power BI. Hopefully this quarter. We're very, very, very busy with it. And after that, we're gonna implement quite some more powerful features because we're no longer gonna be constrained, and things are gonna be good. I'll write a roadmap probably next week so you know what's coming up because things are happening in the background. I can promise you that. All right, guys, thank you all very much for watching. Once again, let's remain patient. Let's wait for the range to form. Let's play the local range until then. And once we get the bigger range, we can take it from there. All right, guys. Thank you very much. Have a good one and catch you soon. Ciao, ciao.